Hello everyone. Welcome to our video on ICO, Initial Coin Offering, Analysis. In this video, we will be diving deep into ICOs, their purposes, and the factors that determine their value. We will also be showing you how to evaluate ICOs as investments, and what to look for when considering investing in one. What is an ICO? First, let's start with the basics of ICOs. An ICO is a fundraising method commonly used by startups or businesses that are looking to raise funds for a new project or venture. Unlike traditional fundraising, where companies sell stocks or shares, ICOs offer tokens that are essentially a digital asset that represents a specific project or service. The purpose of ICOs. ICOs allow companies to raise funds without the need for intermediaries such as banks or venture capital firms, which can be time-consuming and costly. ICOs offer investors the opportunity to buy into a new venture, and potentially profit from its success, by buying tokens. These tokens are often designed to be used on a specific platform, such as a marketplace, gaming site, or a social network. Factors that determine ICO value. Now, let's discuss the factors that determine ICO value. The first and most important factor is the project behind the ICO. This includes the team behind the project, the market demand, and the technology used. A good project should have a viable use case that solves an existing problem, be backed by a reputable team, and have a good technical infrastructure. Another factor that affects ICO value is the token metrics, including the total supply, distribution, and token economics. A good token should have a reasonable supply, fair distribution, and a clear strategy for its use. The final factor to consider is the market sentiment towards the ICO and the broader market trends. A poor ICO launch or negative publicity can negatively impact token value, so it's important to consider market trends and investor sentiment when evaluating ICOs. How to evaluate ICOs as investments? Now that we understand the factors that determine ICO value, let's look at how we can evaluate ICOs as investments. The first step is to research the project and its team. You should look for a clear white paper that outlines the project's goals, use case, and technical infrastructure. You should also research the team behind the project and ensure they have a solid track record in their respective fields. Next, you should look at the token metrics. Evaluate the total supply, token distribution, and token economics. Look for a token with a reasonable supply that is distributed fairly, and has a clear strategy for its use. The final step is to assess the market sentiment towards the ICO. This includes evaluating the overall market trends and investor sentiment towards the project. Negative publicity or market trends can negatively impact the value of the token, so it's important to consider these factors before investing. Conclusion. In conclusion, ICOs offer investors the opportunity to buy into a new venture and potentially profit from its success by buying tokens. When evaluating ICOs as investments, it's important to consider the project behind the ICO, the token metrics, and the overall market sentiment. By following these steps, you can make informed decisions and invest in ICOs that have strong potential for value growth. Thank you for watching, and see you in the next video.